All right, hey, what's going on, guys? I'm going to go ahead and review my Robinhood portfolio today, and I haven't made a video in 2 months. I've been looking at my chart for my videos. I'm looking at it right now. I have not made a video in 2 months, so right now, portfolio sitting at $42,000, almost closer to $43,000. Let's take a look at the past week here. Past week, I'm up $2,000. For the past month, I'm up $78, only 18%. Past 3 months, I am up 2%, so that's pretty good. All time shows 6%. I'm not doing as well as I would like, to hope, but it is what it is at this point. All time shows 20%. So I want to quickly talk about the changes in the market. So you guys already know about the how the election has affected the market. I think a lot of investors are potentially looking at that. The market is still waiting on. The market is still waiting on a stimulus plan that has not been announced yet. But I think that if we do get a stimulus, I think that could support the markets to sort of shoot up higher here, and that'll really be good to see that the government is helping the people out, because the coronavirus is still an issue. And speaking of the coronavirus, there was an announcement yesterday about a potential vaccine from Pfizer. I read that it was about 90% effective, so it still has to go through several different trials before this is dispersed out to the public. But the market really liked that. The market really likes to see there's a light at the end of the tunnel, as far as there being a vaccine, because that's pretty much what everybody's been talking about as far as dealing with all these cases. We've seen the highest amount of cases these past couple of weeks, and the United States continues to set records each and every single day with these coronavirus cases. So we're still in some pretty dark times, guys. The market just wants something to latch on to. The market needs the reason to make some trades, and the way to do it, at least this is just my opinion, I'm not like a professional or anything, but the way I looked at it was, I wanted to shift my portfolio from sort of like a growth aspect portfolio into more value investing. And I remember looking at my older videos. That's what I was generally all about. I do kind of invest in growth stocks, but I was generally a value investor. I was always buying the stocks that were really cheap, and they pay a good dividend yield, and I would just buy, and I would just hold on to those. So I think at a certain point I started getting caught up into the growth wave, if you want to call it that. But I shifted the focus of the portfolio, so there's going to be a significant number of changes with the portfolio, and I'm going to quickly review what I've been up to. So again, I haven't made a video in 2 months, just a quick breakdown, and let's get to it. So take a look at Apple sitting at 116. I have a dividend coming up, $20, and right now I forgot about Apple stock split for 100 shares. Recently I have been trading, but there was a period of time where I didn't really trade because the markets, again, I don't like to look at the markets when the markets are falling or when the markets are selling off. I don't really like to look at my portfolio, because then I get tempted to make changes, and I don't like to make changes. I like to buy and hold. I like to see myself as a buy and hold investor, even though sometimes I do get caught up in the trading wave. So 100 shares, average cost 102, and I haven't really touched this. This has just been sitting here, and there's been a lot of volatility with Apple. Let's take a look at the 3-month chart. So yeah, you can see September 1st, 134, then went all the way down to 106. So it didn't really get to my average cost of 102, but like I said, I just continue to hold. It's a good growth company, and I think this is the only tech company. I think I'm wrong. I think there's another tech company in my portfolio, but this is the tech company that I love to death. I love Apple to death. I'm probably never selling these shares, and in maybe about 5 years, I do another stock split, I'll have like 500 shares, and then you see the pattern. Each and every time Apple does a stock split, you just get more and more shares, and you just compound more and more dividends. that's the way to go. So a lot of the market right now seems to be getting out of mega tech companies. A lot of the market sees the light at the end of the tunnel. So we're seeing I would like what I call a trade rotation, the money being transferred out of these mega tech companies into more value plays. And the way to make money in the market, again, I'm not a financial advisor or anything. I'm not a trade expert, but you have to see these things before they happen. That's what I'm looking at Home Depot now, 274. Again, you have to see these things before they happen because a lot of people get caught in the wave. That's what I'm saying. They trade off. They trade off the news, and instead of trading when the news before the news breaks out, they're buying like crazy, and then when the news breaks out, they're saying, "Oh, I already bought the value stocks. I'm already in value stocks." So everybody else is catching on, and I caught on like 2 weeks back. So I think that's another reason why my portfolio is doing so well today is because I started buying value companies when nobody wanted them. Basically, financials were sold off, oil was sold off, all these companies were sold off, and then when that announcement broke out, now we're seeing everybody else trying to hurry up and buy these companies that are on sale and reasonable valuations. But again, let me hurry up and let me talk about the portfolio. I don't want this to be a video too. Like this might be a long video because I have not done a video in a long time. But Home Depot, 25 shares, average cost $199. I'm up for 37%. So I think in the previous video I had Home Depot at 20 shares. I bought a couple more shares. Not much to say about them. I think they have an earnings report coming up. Let me take a look. Where is it? Yeah, November 17th. So yeah, they do have an earnings report coming up. And this is another one of those buy and forever holds. I would like to see them do a stock split. I don't think they are. I just love the company. I love the company. How the housing market's never going away. People are going to need to live in homes, and Home Depot is like really Home Depot and Lowe's are like the best at what they do as far as like selling all the products for home building. So I definitely like Home Depot, never selling any shares. I did buy more. That rose my average cost. I think I had an average cost of 153 in the previous video. That was 2 months ago. I bought more. Now it's at 199. So Home Depot is another one of those overvalued stocks, but probably overvalued for a reason. It probably deserves the high premium. 26 PE ratio, 20 trading 26 times earnings. It probably deserves it because it's a really good stock. So I'm never going to sell these shares. And if it dips down but below 200, I'll possibly buy more. So take a look at Cisco. Oh, wait, I think I skipped the stock there. Oh, Cisco, 38.75, my average cost. I bought 50 shares for average cost of 36.90. So this is another one of those value plays I was talking about. Cisco, a stock that nobody wants. Really bad guidance. As far as the company is concerned, I think that's that's a reason why a lot of investors are selling this stock like crazy, down 19%. That's a crash. That's actually, that's not a crash. That's a bear market. A crash is over 25% of loss. So let's take a look at the graph. You can just tell the graph. This stock has been beaten down. Nobody wanted it, so I bought it. I'm always looking for high yielding tech companies because you really don't see those. You really don't see those in the market. When you see a high yielding tech company that yields over 4%, that to me was screaming a buy. And I'm very familiar with Cisco products, even though they're going through some transitional phases at this time as far as like 5G is concerned. I know they had something in works with Verizon as far as like their 5G, but they've kind of been having terrible guidance as of late, and that's the reason why people are selling. But I bought this at $36.90. That gives me a 4% dividend yield. You can just take a look at some more stats here. Trading below 15 times earnings, so definitely undervalued. Market cap is really big. These are the companies that I like. These are the companies that I feel people are going to begin to catch on and say, okay, I'm going to transfer some money to a company like a Cisco or something like that. And again, you don't see this every day. You don't see high yielding tech companies that yield 4%. Like the only other one I can think of is probably IBM. So, and IBM is kind of like a fossil. So the Cisco, I definitely think there's a value play here, and I like the company moving forward. So Verizon $61, looking a bit overvalued here, but according to the ratio of 13 times earnings, probably not. Shares 50. I have an average cost of 57. So again, another one of those. I just wanted a high dividend. A high dividend yielding stock. This is actually a high yielding dividend portfolio now. I think for the month of February and quarterly, I think I get a dividend payment of $108. So that's really good. That's extremely good to actually get a dividend over $100. And I think I'm over $100 for each and every single month of this portfolio. As long as I keep this portfolio intact, I will get a dividend over $100. So for February and quarterly in 3 months, I will be getting $108. So not much to say about them. It's just a high yielding dividend stock I like. AT&T, same thing. $28. I bought in at 27. I was really bearish on this company a little while back. I ended up booting them out of my Roth IRA and putting it in store capital. And you guys can see now that store capital is over $31. So that was a good move. $49 total return. Average cost 27. PE ratio, I'm kind of surprised is at 18. I have to really look into that because again, I don't really trust Robinhood all that much as far as like their updates. They're kind of slow on the slow side of updating things, but again, just another dividend play. Total $108 for February and quarterly. So Philip Morris $74. I bought the stock yesterday, I think, $73, and too bad I saw this stock when it was at $70, and I definitely wish I had bought in there. I was hoping it would reach below 70 because again, I think that's an extremely good buy, but good dividend yield. It's a sin stock nobody wants because obviously coronavirus. You're not going to be smoking when there's like a pandemic, or that's what people say. But a massive sell-off. It's a massive sell-off here. At one point, this company was down 11%. So nobody wanted it. I bought it, and now the stock is going back up because people are trying to hurry up and buy value, and we'll see if that continues. Austria, again, same thing. They still have complications with Jewel. I had this company in my portfolio for a while, some time back. Let's take a look at where I bought 120 shares, $36.50, total return $300, so $345. I don't think there's anything in the news. They're still having that crappy investment with Jewel. Other than that, again, it's just coronavirus. Are you really going to be vaping during all those times? So you're going to be vaping during a pandemic. That's it's really been on the downturn here. It's officially crashed in the past 5 years. Not doing good. I bought in at 36, but we'll see what happens. Austria pays a really good dividend, and they've proven that the dividend is reliable. They've actually increased their dividend. It was at 84 cents last time I looked at it. Now it's at 86 cents. So I think this will pay me over $100. This will pay me over $100 just by one stock alone. It will pay me over $100 with some nice capital appreciation. And for the month of, I think this pays in the month of January and quarterly 3 months, I think I will be getting a total of $184 worth of dividends. So for January and 3 months. So that is insane. And I might be wrong. I gotta look at my math. I think it's like $181 worth of dividends for January and quarterly. Obviously, that is just extremely good. That's money I can pretty much feed me for a whole week, or go to the grocery store and just buy a huge amount of pretty much anything I want. Yeah, it's crazy. It's extremely crazy. Chevron CVX, I have 80 shares. Turnover return is 16%, almost $1,000. So, wow. I didn't expect Chevron to go up this fast, but again, people are trying to buy value. They see that there's something that could be that can overturn the narrative as far as coronavirus is concerned. And so that's the reason why people are buying these dividend stocks. They're buying value. They're buying oil. They want to buy oil now when oil was neglected for pretty much the last 6 months. So again, you have to see things before they actually happen, and if you do, you get stuff like this. That's not to say that this pandemic is just going away. I don't think anything's going away. I think that the market is just trading off the news, and coronavirus, it will continue to be a problem until we have a definite solution on hand as far as to get rid of it. Right now, we all we're doing is we're seeing a light through the tunnel. We don't really see a plan, an action plan that could protect us from the virus, protect us from the pandemic. But again, just the stock is concerned, I'm up 16%, average cost 69.90, so 80 shares. This is another company that will pay over $100 worth of dividends. So I think for this month, when does Chevron pay? I think Chevron pays in March and quarterly. So that would be a total of $172, because I know Chevron pays, Home Depot pays, and then another stock that I bought pays. So, and that other stock is Main Street Capital, $31.14. The markets are currently open, guys, so that's the reason why you guys see people trading and doing things. Average cost $28.61 for 150 shares. A total return of 8%. So this is a pure dividend play. I wanted to get a monthly dividend stock into the portfolio, and I've gotten burned by this before. This whole yield chasing sort of, buying companies that nobody wants and yield chasing. I gotten burned by this before. So, I don't personally recommend this, but again, I want value for my money. I work hard for my money. I was just thinking about it the other day. I thought about it just one day, and I'm just saying I'm looking at Amazon, I'm getting ready to buy Amazon, and Amazon was I think it was over $3,000. It was over $3,000. I'm like, man, this thing is expensive. I don't know if so still over 3,000, down 3%. So it looks like a lot of people down 3%. So people are really abandoning these mega tech companies, but still expensive. And the PE ratio is insane. It's closer to 100. So it's trading 100 times its earnings. Probably it well deserves it. It's Amazon, of course, but I want value. I work hard for my money. I want some value. I want some dividends. I want to get paid for doing as little as possible. I'm yield chasing. I don't encourage it, but again, it's a risk. I got burned by Shell, and I know it. I know that now. I totally was looking at Shell the other day, and I'm like, man, that company is down. Where is Shell? Let me see. I know I'm prolonging the video, guys. I apologize about that. I just want to see something here. So $31. I can't scroll here. Let me see. Shell B. Let me see. $29. So yeah, definitely people are moving money over to these oil companies, and they're spiking up like crazy. Yeah. Anyway, let me go back to Main. So Main Street Capital looking really good today, 4%, 150 shares, 28.61. So I'm doing really good with the company. This is a business development company that focuses on financial solutions. So this is sort of like a bank replacement. I was tempted to buy Bank of America, but I was looking at the yield, and I was like, I pretty much said to myself, it's yielding over 3%, which is really good. But I just felt that I can get more potential out of buying a BDC at this point, as that pretty much does the same thing. It's just on a lower end scale of what Bank of America does, but I'm still getting a juicy dividend. I think it's probably when I bought it, it was probably at 8%. And Main Street Capital recently announced their dividend protection, I would say dividend protection program or whatever. So the next couple of months that they announced that they will be paying the same dividend or something like that. They're going to be paying 20 cents for the month of December all the way to like February. So that kind of ensures investors that protection. We don't know if they're actually going to cut this dividend, because this dividend is extremely high. And again, it's all about risk. Sometimes when you're in this market, you have to you put money in a stock, and you never know. You just never know if it's going to go down or up. It's all a risk. It's all about limiting the risk, doing the research, doing due diligence. That's pretty much all I can say about as far as that is concerned. But now the portfolio looks like it just climbed over the $43,000 mark, and that's it, guys. That's it for my portfolio. One company that I did sell. Let me take a look here. I sold Avi, and I am regretting selling this company. I'm actually kind of upset that I sold this company because I held this company for almost I held this company for a year, and I sold out, and it was like around $84, and I should have sold it when it was like $100 or something like that. Let me see its earnings. It had good earnings. It recently increased its dividend. There was no reason to sell this. And one day I was looking at it, and I just told myself, I said, hey, I held this stock for a year. If I sell it now, I won't get any tax penalties, as I can move this money into like another beaten down stock. Because when I bought Abby, it was at $65. I think it was at $65. It was beaten down. I gained like almost $1,000 worth of profit, $1,000 return. So I moved this. I think what I did was I took this money, I moved it to Chevron. So I moved the money to Chevron, and it was at $69, and I bought Chevron, and from now it looks like that was a good move, but I love this company. This company I like. I want this. I don't have a health stock now. I don't have Johnson & Johnson anymore. I bought Johnson & Johnson, but then I'm like, what am I doing? Why am I buying this stock? It's trading at over 25 times earnings. I'm gonna wait for a better price. That never happened. It got all the way down to 137, and even then, I looked at that and I said, that's just not low enough. Johnson & Johnson to me is a buy around $120, a fair value. That $137, that's still pretty expensive. I took it off my buy list. Yeah. So you guys can see that I have a little hold on. I got a little buy list down here, value investing, but that's going to do it for portfolio. I don't want to make this video too long. I just want to update you guys on what's been going on with the portfolio. Now I'm sort of like a dividend approach, a dividend investing approach, and I'm really careful about buying the companies that I'm buying now, because again, I'm kind of worried. I got burned with Shell, and I'm like, oh my god, like a company that didn't cut its dividend since World War II just cut their dividend, and that really just blew my mind. These companies can cut their dividends at any time. We just never know until they announce it. And it's kind of funny because Shell, the CEO, recently announced that they weren't cutting the dividend, and then they went on to cut the dividend. So I think that really made a lot of people mad. It made a lot of people angry. It definitely made a lot of retirees angry because they depend on that money to help them pay the bills. The days of you retiring off Social Security is over. You need dividend growth stocks. You need something that can pay you on the side, that can help you with that retirement. So I'm always looking at what the retirees are saying, and eventually I will be one of them. I'll be a retiree, and I want my dividend portfolio to pay me a nice yield. So that's going to do it for portfolio, guys. Right now, I'm at 2%. I hope everyone has a great trading day, and I'll look forward to talking to you guys next time.